This right here is one of my trades from last week. This trade gave me 1:10 risk to reward ratio. And there's another trade I took right here. This very trade gave me 1:7 risk to reward ratio on the first entry. Then the second entry also gave me another 1:7, making the total of about 1:14 risk to reward ratio. In this very video, I'm going to give you guys a complete guide to your structure, liquidity plus POI, right? So these are the only three things you need to become good with your technical analysis. In this video, I'm going to break it down to 5 different steps that's going to help you become profitable. Now, some of these signals were sent out to my Telegram. The Telegram link is in the description of this very video. It's 100% free. I sent out this one. I gave me 1:7 risk to reward ratio right to the Telegram. So the link is in the description if you wish to join. Let's not waste time. If it's your first time here, you're watching God's Will, and this very channel is the Day Trading Geek. On this very channel, I do video on how traders can become profitable, on how traders can start making money from trading. So if you are new here, you're highly welcome. And if you have been watching me, you're also welcome back. So the first thing, structure. What exactly is structure? Right? First thing, if you hear structure, what is structure? Structure is just your trend, the direction of the market, where the market is heading. Now, we have 3 directions the market can be going. The market can be going up, in this case, creating higher highs and higher lows, going up, going up. I'm going to show you how I know the structure, I know the direction and all of that. It's going up. Then the second one is when it's going down. Then the third one is when it's ranging. Right now, these are the structure, just the trend of the market. Which direction is this market heading? Now, why is it important? In this strategy, in this very structure, you want to make sure you are trading along with the people in charge of the market. If buyers are in charge of this market, you want to do everything possible to make sure you are buying that very currency. If sellers are in charge, you want to make sure you are selling. So you want to know the people in charge by knowing the structure or the direction of the market. Now, a market can be in a downtrend or it can be in an uptrend. How do you know the trend of the market? I simply personally use the break of structure. I personally use my break of structure to identify where the market is heading. This is what a break of structure is. A break of structure is when the price creates a point, maybe a high, then go down, then go up and break past that very previous high it created. Automatically, this is a break of structure. Automatically showing me that this market is in an uptrend, because if it's breaking structure to the upside, it's going to keep going higher, create a high, come down, break past it, it's going to keep going higher. Break of structure to the upside, automatically showing me that this market is in an uptrend. Why in a case where the price is going to create a low, push up, come down, break below that low, this is a break of structure to the downside, showing me that this market is in a downtrend, is going down, right? So that's what a structure is, or that's what the structure is. It shows you the direction of the market. I'm going to go about show you how I took all of this trade and how I do my analysis, right? This very first trade now, I took it. I believe I didn't send out the signal. It was a personal trade. I took it myself. And I also sent out to my students. This was the first trade I took. It was a buy. The second trade I took was a buy. If you notice, I didn't take any sell. Why? Because this direction, this structure is bullish. It keeps breaking structure. Buy. The price created is very high, came down, went up and broke past that very high. A break of structure. It's breaking that structure, is going higher, right? Showing me that this market is in an uptrend. And all I want to look out for is buys. I'm going to show you how I trade this. I'm trying to explain each of these. Now, the second thing now is the liquidity. Right now, liquidity is extremely important. Many of you are going to ask, what exactly is liquidity? Why do I need it? What does it do on the chart? Now, these institutional traders, they are the ones who are in charge of pushing this market. If the price decides to start buying from here, the price is able to get here and start buying, is because those institutional traders were able to enter for buy. That's why the price started going up. If they're not able to execute their buy, it will not go up. So now for them to enter into the market, they need liquidity. Liquidity is just money available in the market. Liquidity is just the money available for effective trading in the market. Now, for them to enter the market, now they need that money available there so they can easily buy from the money or sell into the money, liquidity. So now, where are they going to get the liquidity from? Liquidity is always resting above highs and below lows. For every high that the market creates, gets to a point, go down, there's liquidity gathered or resting above that high. How is that, or why is that? Now, Many traders will want to mark out a level, maybe an order block. Those who know what order block is, or maybe a resistance level like this, and want to sell because the price has previously sold off from there, and every trader wants the price to come back and they sell. Meaning, if we are selling from there, where's our stop loss gonna be? If I'm selling from here now, my stop loss is gonna be above that high. I have liquidity resting above that high. I have my money resting above that high. If the price is able to just push up a little, go above this very previous high, I'm going to get stopped out. I'm going to lose money to the market. I'm going to lose the liquidity, which is money, into the market. Meaning, if I'm able to lose money, I lose money, you lose money. Other different traders who are also selling from this very region also lost money to the market. We've provided liquidity into the market. Those institutional traders now can now enter for their sell or enter for their buy, since there is now enough liquidity for them to enter into the market. Just what happened right here. This was a low which has liquidity. The price did not buy from this very low. Why? Because there's no other low that is going to provide the liquidity for the price to buy from here. Then what happened? The price came, took us that very low, and tapped on this second low before buying. You can just see what the price did, because the price needs liquidity. Another case, it happened again the second time. The price had this low. There's no other low protecting that very low. So what did the price just did? The price came, took out that very low to tap on this area and start buying. This area it's tapping on is the point of interest. I'm going to get to that. And it started buying. Why? Because the price always needs liquidity to move. If there's no liquidity, the price will not be able to move. I believe you already now know that. Institutional traders will not be able to enter for their buy or enter for their sell. So what are they going to do? They're going to stop we traders out of the market before they move. Right? Then the third thing right here is the point of interest. Now, what exactly is the point of interest? Point of interest is where you're going to potentially take your trade from. Now, you successfully now know this market is in an uptrend. It's had a high, it came down, broke structure, right? It's created liquidity, which is this very low has liquidity. This very high has liquidity, and the price has just went up to take out the liquidity above this very high. So what do you now expect? You expect the price to come down to take out the liquidity below this very low, right? There's liquidity here, there's liquidity here. The price has taken out this liquidity by breaking past it. So there's liquidity resting below this low, below this low. What do you now expect? You expect the price to take out any of this liquidity. Maybe take out this first one and even take out the second one. But it doesn't always happen that way. If it's going to take out all of this liquidity, is bullish, you won't be selling, so you want to buy. So what you do is you wait for the price to take out this very liquidity and you buy from a point of interest closest to the liquidity. What does that mean? Point of interest now, like I said, are areas where you'll be entering the trade from. You have successfully now know that this market is in an uptrend by marking out your break of structure. Then you successfully now know that this low has liquidity. Now, what are you going to do? Since it's in an uptrend and you will be buying, what are you now going to do? You mark out a point of interest where you likely buy from. And this point of interest are always, the one I personally use are always order blocks and breaker block. What's an order block? Another block is the last opposite candle before the price started moving. The price was going down. On getting here, it was going down, maybe showing red candle as it's going down. On getting here, it's going to show the last red candle before it starts showing blue or green and start going up. So the last red candle right here is an order block. On getting here, it was showing blue as it's going. On getting here, it's going to start showing maybe red and start going down. The last blue candle or the last green candle is an order block. Let me show you right on the chart. Right here, the price was going down. Went down. On getting it, this was the last black candle right here. So automatically, this is an order block. It's a point where I will likely buy from. It's a point of interest. Where I have interest, I need to buy from there. Right now, this is the last black candle for my chart is black and blue. So this is the last black candle before it started showing blue going up. On going up, it's bullish, right? On going up, it came down again. It sold off again. It came down, created this was another last black candle before it started pushing up again. Automatically, this is an order block. This is a point of interest where we buy from. Now, a breaker block is a failed order block. Once an order block fails, it's going to turn into a breaker block. Let's say, for instance, You mark out a level, this very level you want to buy because it's the last opposite candle before the price started moving. It's an order block. Now you mark out that level you want to buy. On coming there, the price just came, violate it without respecting it. Now, automatically, this drawing it forward is now a breaker block. Just like your support turn into a resistance or your resistance turn into a support. Now, what are you gonna do? You will now wait for the price to retrace. Since it just violated it, it was a support, it just violated and is now a resistance. An order block turned into a breaker block. Now you can now sell from here. You were buying, but the buy did not work. You can now sell. Not all of them are valid. I'm gonna give you how I personally go about it. Like this very one. There's this last blue candle right here. The price was going up. On getting it, this was the last blue candle it formed before it started dropping. Right? Automatically, this is an order block. So if I go over, draw this forward, if I go over, draw this forward, now you can see what the price did. It just came, violated it, did not respect it. Automatically, this is now a breaker block. So I can drag it forward. It's now a point I will be buying from. Because I was trying to sell, it did not work. I'm not buying from there. And on coming back down, you can see what the price did. On getting there, the price went up. This very trade, I took it, it gave me 1:3 before reversing. Right, it was up to 1:3. Not 1:4, it was up to 1:3. Now, this trade, it was a breaker block. On getting here, the price tapped on it, pushed up, gave me 1:3. But I did not take profit. I just break even before reversing. Automatically, this is now a previous resistance now turned into a support, and the price respected it. That's what a breaker block is. So, order blocks and breaker blocks are my point of entry or point of interest, right? Where I will likely take my trade from. And for an order block or a breaker block to be valid, there are two things. First thing now is for it to have a break of structure. If another block does not have a break of structure, I don't always consider it. Meaning the price need to come down, create this other block. The other block need to push the price up to break that structure. Let me show you a nice example. Now, the price came down, created this very order block. Then this other block pushed the price up. The price went up and took out this very previous high. I believe you now know what a break of structure is. Took out this very previous high as a break of structure. Automatically, this other block is valid, but it's not fully valid until I have my liquidity. Those are the two things that's going to make my point of interest valid for me to enter trade from. So now, it has this break of structure, then it has this low, which is going to act as liquidity protecting it. I can take my trade, either buy or sell. Then this other one, the price had this other block. This other block pushed the price up, and the price went up and broke past this very high right here. On breaking past that very high, this other block is now partially valid because it has a break of structure. Now, where's my liquidity? This is a very low right here, which is protecting my order block, which is a point, which is now a valid point of interest, which is now a valid order block where I can take my trade from. The fourth thing right here is directional bias. I'm going to give you out to know your directional bias, then give you how I personally trade it. This very setup right here was sent to my students, right? This very setup that gave me 1:7 over 350 pips, right? It was sent to my students, and this is our general group. So I have a mentorship class where I teach students how to trade the market, how to do your technical analysis, how to become profitable, start making money from Forex trading. Now, if you want to join, it's about $40 for 3 months. In Naira, it's about 50,000 Naira for 3 months, and 2 times payments are allowed. You can pay 2 times, partially and partially. Then for one-on-one, if you want me to teach you one-on-one class, it's about $170. In Naira, it's about 270,000 Naira. So you can easily click on the link in the description to join. Now, once you pay for any of the mentorship, any of the program, you'll be added to my mentorship class group. Once you have been added, you'll be sent video lessons, multiple video lessons you can easily start learning from. And my mentorship program is always live classes. I do live class with my students 2 times every week. 2 times we do live class every week, and video lessons are available. I don't sell course, it's live mentorship, right? Me teaching you everything live. So now, this is the May mentorship class, currently the ongoing mentorship. You can also still join. Click on the link in the description to join. Then for April mentorship, like I said, I sent out this setup to my students, and let me show you where I sent it out. Right, I sent it out to my students right there. This was the setup right here. Take a look at the setup right here. This was where I had the setup right here. Can you see it right here? Beautiful. It was on a 2-hour time frame. You can just see the setup and take a look at the trade right here. This was the exact same trade, the exact same setup I sent to him, right? This was the setup right here, and this was the trade play out. Beautifully hitting full TP 1 to 7 over 250, about 350 pips, right? Over 350 pips. So if you want to join the mentorship class, there's a link in the description. And this re-entry was sent out to my free Telegram. The free Telegram link is also in the description. The re-entry was sent out to my free Telegram right there. When I was taking the re-entry, I sent it out. So now let's continue. If you want to join, there's a link in the description. Just click on the link and then you join. Right? It's always up to you. It's gonna help you. My students I have so many students who are testifying that they are profitable. So my mentorship is effective. Now the first thing right here is directional bias. You can't just go over to the chart and start buying at some random point because you have a point of interest. The market is bullish. You have your liquidity. Just start buying. You want to know your directional bias. What this directional bias does for you is to know if this price is going up, where is it gonna get to before reversing? If it's gonna reverse, if it's going up, where is it going to? If it's going down, where is it going to? It's important to know it because most times, if it has gotten to that level, you will not know. You'll still keep buying. It has gotten to a resistance level where it's gonna start selling. You won't know. You'll try buying again because you don't know about this directional bias. Then if it has gotten to a supply level, a support level, you don't know. You start keep selling. You just keep hitting stop loss. Now, how do you know? What I do is this is how I personally trade it. Knowing this directional bias is also how I personally trade it, right? To know the directional bias, the first thing I do once I jump on any chart, this is how I trade it. Know my directional bias, how I enter my trade, right? So you want to take note on everything I'm saying. First thing I do is I go to a higher time frame. I'm a day trader, and these are the time frame I use. Depending on that, on the type of trader you are, you have your different time frame to use. But I'm a day trader. I'm not a scalper. I'm not a swing trader. So as a day trader, I first go to a daily time frame. Now on a daily time frame, I want to zoom into the price. This was how I took these buys. Let me show you how I took these very buys right here. This market was going down. If you notice, it was selling this on USD POI, selling aggressively. It was selling. I didn't just go over. I entered for some sell. I entered for some sell at this very level. I entered for some sell right there. But at some point, I know it's gonna reverse. So what did I do? I marked out this very key level right here, which is a major daily support level. Can you see it? Where the price has previously gotten to and bought off from is a major support level or a major order block on a daily time frame. So I mark it out, which is now a level where I expect the price to buy from. So now I now know what I'm expecting the price to do. Now the price is currently going up. I'm expecting it to get to maybe this daily resistance level and sell. If it's gonna sell, I'm gonna wait for my confirmation before I sell. Until the price gets there, I'm gonna keep buying till the price gets here. I won't sell till the price maybe get to this my bias where I'm expecting it to get to. So now I want to now go to a lower time frame, which is where I now take my trade on a 1 hour, 30 minutes, 15 minutes time frame. On all of this time frame, I now look at for all my three things. My break of structure, which is my structure, liquidity, then I mark out my order block and take my trade. Now, on getting here, this was the first trade I tried taking. I sent out this signal. We hit stop loss on this very signal. It was last month, right? We hit stop loss. I sent it out as a general signal, even to my students, and we all lose money. I took this very first trade. I hit stop loss. I took it from when immediately price got there. I took it. I hit stop loss. So my entry was pretty bad. Now it's now bullish. I was not able to enter for any other buy. But immediately the price had this break of structure, which is the price coming down and breaking past very high, automatically showing me that this market is in an uptrend. And now this is a low, using this low as my liquidity, using this last black candle as my order block, I took my first buy. First buy right here, targeting this high as my TP. Stop loss just slightly below the low. If you want to get a complete guide, if you notice, if I say let me teach everything, the three different type of liquidity we have, the liquidities we have in respect to this, lows has liquidity, highs has liquidity. But if I'm going to teach the three liquidity we have, how the price do form it, when the price do form it, it's going to take a very long time. So that's why I do video on liquidity alone. So try and watch this video and see if you are going to understand it. If you don't understand it, then go join my mentorship class. I teach it bit by bit, right? if on a single topic, I'll teach liquidity just to make sure every single one of my students understand one thing at a time. Now, using this low as my liquidity, which is an example of a liquidity, this example is the first pullback after a break of structure. Immediately the price broke this structure. This was the first time it's pulling back, which is the first pullback after a break of structure, is a liquidity. So marking that area out as a liquidity, I took my first buy, target 1:4. I guess I deleted the setup. Right on my system. I had the setup where I took the trade. First buy happened 1:4. I hit TP, giving me over 200 pips. Then I marked at this very level as a previous order block where the price now violates, automatically breaking above it as a breaker block. So this is a high, and the price broke past it as a break of structure right here. Then this breaker block now has a break of structure. Then this is a low, which can act as my liquidity. So that was where I marked that as my liquidity right here, where I'm going to likely take my trade from. Now what happened? The price came, tapped on it, and started buying. I was targeting this extreme high, but 1:5. But when it gave me 1:3, it reversed. Right, I didn't take profits. I just had brand break even. Then it hits my stop loss. Then there was a second buy I tried taking right here. I tried taking this very second buy right here as it was moving. I had this high. The price broke past this very high as a break of structure. So I was expecting it to keep going higher because it's in an uptrend. So I marked out an order block somewhere here. I had an order block right here. I had a low on this was a lower time frame, right? Re-entry. This was a main entry. This was just a re-entry, lower time frame. You should know what re-entry is. I've talked about it in my YouTube videos, right? So try and watch those previous videos. Then I had this re-entry. This re-entry hits my stop loss, right? But this other one hits break even because this one moved in very little profit. It was not even 1:3, so I can break even. It's moving 1:1, then reversed. So I had a loss on this trade right here. Then I waited. I didn't take any sell. I waited till the price got here. Immediately the price got there, this was when I sent out this very image. It was a correction for my student. Take a look at what the student said. He said, is it necessary I use the whole range as my stop loss or just below OB? Right? He was asking me the question. Then I just sent him the setup. I said, wait for confirmation. Right? So everybody replied. He replied, thanks. Then it was a play out. Using this low as my liquidity. This is another example of liquidity you can use with this strategy. So I took my trade from this order block right here, targeting this extreme high as my TP. My directional bias is still bullish. You can notice this was a re-entry. I sent out this re-entry to my Telegram. The Telegram link is in the description, and the Telegram is 100% free. So if it loads up, I'm going to show you the setup where I dropped it for my student right in the Telegram. So let me see if I'm going to find it. Right here, all my setup, I don't drop all setup, right? Last week I made about $600 from a single trade on gold, right? $600 from a single trade on gold. I didn't send out the setup. Take a look at it. About $698 from a single trade. It was a sell I took on gold, giving me 1:10 risk to reward ratio. I'm also going to teach you how I took that very sell, right? This was the entry on the gold sell, and this was the play out. 1:10 risk to reward ratio. TP was hit. Now this was the setup right here. This was the hit, the TP hit 1:7 risk to reward ratio, 200 plus pips. Then this was the signal. This was when I had the setup right here. I dropped it right in the free Telegram. Then in the morning, just like that. Now I'm expecting the price to come here and continue buying because it's an order block, and I'm expecting the price to come here and buy. Just I'm still now expecting on this market, right? Simple. Then there's another trade I took on gold. The sell I took on gold and how I took that very sell. Now on gold, first thing I do is to go to a daily time frame. So on a daily time frame on gold, I saw that this is a major resistance level, a level the price has gotten to and sold off. So automatically I marked it out with this line to show me that that's a level the price can potentially start selling from. So I went to my lower time frame, my 1 hour 30 minutes for my entry. Now on getting there, immediately the price got there, I didn't enter for a sell. Because if I enter, it's going to be crazy. It's too much. The pips will be too crazy and all of that. So I waited. On waiting, the price came, tapped on it, sold off, came back, retraced, tapped on. There's a 4 hour time frame key level the price got to, a 4 hour time frame point of interest, then price started dropping. right? Now automatically showing me that this market is actually going to sell because I just got into my key supplying level or a key order block, a key point of interest, and the price has sold off aggressively. So automatically I have my order block right here, which is this last black candle before the price started buying, right? The price was selling, sold off before it started buying. This was the last black candle. So automatically it's an order block, is a point of interest. So I marked it out. I didn't take any buy. I can even, my trade history is not here. I didn't take any buy because I know sellers are gonna likely walk, right? So this was the trade that happened right here. It just violated the area. Automatically, it's now a breaker block. So I just drag it forward. Dragging it forward now is now a level I'm gonna sell from. I was trying to buy, but it did not work. I'm not gonna sell from there. So I took my sell, having about 60 pips stop loss, targeting 615 pips, right? So this trade hits TP1 is to 10 risk to reward ratio. Now the price was still going down. I marked at this very level. This was the last black candle before the price started pushing up, right? Just the same way. I marked it out and it's the level I was trying to sell from, but this one hits stop loss. So now, these are how I took all of this trade, and this is how I keep trading these very three things: the structure, liquidity plus POI. I believe this video has successfully now teach you what structure is, what liquidity is, and why it's important. What the POI is, what you can mark out as your POI, point of interest. Then how to know your directional bias. Then how I personally do my top analysis and how I personally take my trade. Now, if this video was helpful, give it a like and go over, share the video with your friends so your friends can also come watch this and become more advanced with their technical analysis. So if you wish to join my mentorship class, and the link in the description, just click on it and you'll be redirected and you make your payment, you'll be added and you'll start learning from me. Then if you want a one-on-one class, also click on the link or you message the WhatsApp number in the description and you'll be added and you'll learn from me. So if this video is helpful, like and subscribe and turn on the notification bell so you'll be the first person to get the notification anytime I drop new videos like this. I will see you all right in my next video.